Hello, everyone. Welcome to today's webinar. We'll give a few more minutes, 2 minutes, and then we'll start. Okay, we'll start. Good morning, good afternoon, everyone. Welcome to this webinar on gender lens agri-lending. And our intention for this webinar is to share lessons learned from 2 financial institutions in Kenya and Uganda, and that have been receiving technical assistance support through Value for Women and a collaboration between Value for Women and Aceli Africa. We look forward to having an interactive session today, and we will start by introducing to you the team. So on this call, we have the Aceli team and the Value for Women team and representatives from the 2 financial institutions, that is Family Bank in Kenya and Mango Fund in Uganda. So on the call, we have Anne Maftey from Value for Women, and she has a team of 3 other team members from Value for Women. And we have Liz and I and Esther and a good number of representatives from Aceli. So thank you very much for signing up for this session. And so in today, our agenda will start with introductions and then follow up with the case studies from Family Bank and Mango Fund. And then we'll also love to hear from you. So we have a Q&A session, and then we'll have a session on key takeaways and take it from there. So thank you very much. I'll quickly take you through what Aceli Africa is for those of you who have not interacted with Aceli. So Aceli is a market incentive facility that seeks to bridge capital supply and demand in the agri-SME finance market. Aceli provides financial incentives to lenders, including commercial banks, non-bank financial institutions, and social impact investors to unlock lending to agricultural SMEs. And the incentives are intended to steer lenders to seek out and serve what we call the highest impact SMEs, with a particular focus on SMEs or agribusinesses that are inclusive, contribute to food security, and are also promoting environmental sustainability practices. So Aceli offers incentives and also offers what we call higher incentives, which is in the form of impact bonus for loans that meet our higher standard impact areas. And these include food security and nutrition, gender, climate, and youth inclusion. And that's why we are here to discuss about gender inclusion. Aceli also offers technical assistance to SMEs on business management and investment readiness. And we also offer capacity building to our partner lending institutions on thematic areas such as agri-finance and gender inclusion. So our gender inclusion is, we have built it on the 2X challenge criteria. This is a criteria that was developed by development financial institutions, and it's currently being used in the financial sector to assess gender inclusion in a portfolio and also for businesses that are receiving support. So the criteria looks at gender inclusion at leadership level, and this includes ownership, composition of senior leadership within a business, board membership, and also looks at participation in terms of employees that a business engages and also suppliers that a business buys produce from. So for us, what we've done is we're using this criteria, and currently we have 68% of our portfolio is meeting the 2X gender standard, which we think is a very, it has gone beyond our target, because our target was 30%, and that is the criteria that the 2X established for gender inclusive portfolio. In our second year, what we've done is we decided to enhance a bit the criteria by offering double bonus for loans that meet gender inclusion at 2 levels. That is at governance level of a business, that is ownership, senior leadership, and board membership, and also at participation level, that includes employees and suppliers. And so far, we have seen that there are still SMEs in the region that are gender inclusive at both levels. And as we speak, 26% of our loans meet gender inclusion at both the 2 levels. So that is just a preview. For more information, please reach out to Aceli team members, and we will be happy to engage with you and discuss further. Thank you. I'll hand over to Anne.
Thanks, Eda. I'm actually going to hand it over to my colleague, Luis, to walk us through a quick intro to Value for Women for those of you that are not familiar with us. Luis?
Hi. So thank you everybody for being here on behalf of Value for Women. So who are we? For those of you that don't know us, and I definitely see some people we know and some we don't on the list. So we're a specialized advisory firm that helps organizations just like you, whether you're a development finance institution, a bank, an MFI, a social enterprise, a fund manager, and really SMEs themselves and women entrepreneurs, to think with a gender lens and to overcome the barriers that women face when accessing different types of products and services, and particularly their barriers to financial inclusion. We are 10 years old this year. We have worked with hundreds of organizations. Just in the last 2 years, though, we've worked with what we call high touch engagements with 15 financial institutions, 35 fund managers, and 200 businesses. And then through our boot camps and fellowships and other types of engagements with the wider ecosystem, we worked with over the last couple of years also with about 500 of these types of organizations. And with all of them, what we do is help them get to action faster on gender equality. How do we get them to get there faster? And how do we get gender to not only a gender lens to not only get us to better business outcomes and investment outcomes, but also to promote gender equality as well. And so that's us. Please reach out to us with any questions, and we're very happy here to present these initiatives. And I'll pass the mic over to Eda.
Eda, you're on mute.
Oops, sorry. So as we all know, micro and small enterprises in the East African region drive the job creation and economic growth. But we have a segment of these micro SMEs that are operating in the agricultural sector that lack access to finance, and they need to grow for them to have an impact on the economic growth and also creation of jobs. So we know that, the agriculture sector contributes to about 25 to 30% of our GDP, but receives only 2% of credit or financial support from conventional financing institutions. And this also depends on a country. So we have countries that have 4%, while others have 2%, but the average is 2%. So before Aceli was launched, we conducted a data collection exercise, and this data helped us to confirm that lending to agricultural SMEs in East Africa is 2 times risky as compared to other sectors, and it leads to 4 to 5% lower returns to financial institutions. So there are so many challenges that are facing the agri-SME in accessing finance. And this is amplified especially for businesses that are owned by women or run by women in the region.
So it's, thanks, Eda. So it's, I guess, with this acknowledgement in mind, this big gender gap in financing, access to finance, that sort of Aceli and Value for Women came together to work on this initiative. I think probably if you're joining this, this conversation, this webinar, you're already pretty familiar with why gender matters in the agri-lending sector, but just to sort of set some of the context through which you can then hear about the two organizations that we worked with during this project. So, I mean, GLI, Gender Lens Investing, helps advance gender equality and economic development. There really is no sustainable development possible without gender equality. And we actually know through a lot of research and data analysis that countries that have higher rates of gender equality also are more economically stable and prosperous, less likely to be in conflict, internal conflict. In fact, there's a correlation between women's participation in the labor force and peace and stability, which of course helps drive economic growth and prosperity. We also know that women play a crucial role in the agricultural context. And this is even more the case currently as we're seeing growing rates of urbanization and flows of especially men and young men leaving rural areas to go seek work and opportunities in urban centers, which means that women are often left behind to manage the farm. So they really are playing an increasingly crucial role as farm managers, as workers, as farmers. You'll also hear from our two presenters today from Mango Fund and Family Bank that they really believe that serving the women's market represents a strategic opportunity for them. They've looked at their portfolios, they have seen that women are often better customers in terms of repayments, but they also acknowledge that they could be doing better at reaching more women. There's definitely still a gap remaining in terms of outreach. And part of the reason for this is because women, as we know, and women entrepreneurs and business owners face a number of barriers to accessing finance, accessing technology, accessing know-how and information, to be able, and also markets to be able to grow their businesses and their enterprises. So closing these gender gaps ultimately can help improve productivity at the farm level, and also has important knock-on effects, of course, in terms of rural development, food security, and economic growth. So without further ado, let me get into just a quick overview or summary of the project that Aceli and Value for Women jointly implemented. Which was supported with USAID Invest funding. So the objective of this project, which ran over the course of the last year, was to enhance the capacity of lenders, financial institutions in East Africa to integrate a gender lens into their agricultural lending product offering or processes or internal work culture and operations in order to have ultimately benefits on SMEs that they lend to. The project was organized in two main phases. So the first phase was made up of a 4-part virtual workshop series, which ran over the course of September to December of last year. And we had about 17 financial institutions attend the workshop series. And the workshop series focused on introducing key concepts and approaches to embedding a gender lens into financial institutions' operations, into the way that they engage with their customers. And then following each workshop, we also offered virtual office hours with Value for Women experts. So this was an opportunity for participants in the workshops to really deepen their understanding, come to us with perhaps a business challenge that they were facing, get access to additional resources and tools and information. The second phase kicked off at the beginning of this year. The second phase involved medium touch, what we call medium touch gender lens technical assistance support to 2 financial institutions. So participants who attended the workshop series at the end of last year were able to put in an application form to be considered to receive technical assistance, and then went through a selection process. The Value for Women and Aceli team ended up selecting 2 of those applicants to move forward with TA. And so the TA kicked off in sort of end of January, early February, and over the course of 3 or 4 months, we did some fairly intensive work with these 2 financial institutions, which ultimately culminated in the implementation of a number of actions to take forward a gender or embed a gender lens. And you'll hear more from each of these institutions about what exactly those actions look like. So I will actually hand it over to our first presenter to walk you through what Mango Fund has implemented over the course of this TA engagement. And so, Joylene, over to you.
Thank you, Anne. Good morning and good afternoon. Joylene is my name. I'm an investment analyst at Mango Fund Uganda. Mango Fund is a social impact investment fund in Uganda with 2 offices. The main office is in Bugolobi, Kampala, Uganda, and satellite office in Gulu. Gulu is in the northern parts of Uganda. As a fund, we normally do investments ranging typically between 50,000 USD to 70,000 to 75,000 US dollars to investors, to rather businesses that are involved in agro-processing, in manufacturing, in technical farming, in consumer packaged goods and medical services as well. Our journey with the Value for Women Technical Assistance team started in January, and we've moved with them a journey of about 6 months, 5 to 6 months, thereabout. And typically we were looking at how to improve our portfolio to really embrace the women-led businesses across the country. And on a good note, I should say, we've seen women entrepreneurs. Our portfolio at the time of the initial engagement with the technical assistance team, we were just less than 15% in terms of the whole book. And we've seen our book now grow to about 25%. So that was a very good note to us as the team. And that was all appreciation going through to the Value for Women team through the different engagements that we had and the input they were having on our portfolio. So with them, we were able to build and come up with a gender-based strategy and commitment strategy. And that was one of the main things that helped us really to see that we have improved on how we are engaging and embracing and embedding the gender strategy into our portfolio. And typically what made us really get into this whole partnership or technical assistance, it was more of the passion that we had towards seeing the women entrepreneurs really also become part and parcel of our businesses, because we're only noticing it was only men that were mostly benefiting, but now the team is all embraced into ensuring that we also recruit and onboard as many women as we possibly can have into our portfolio. So it's been a great journey, I should say. And since then, we have been able to incorporate a few things from the technical assistance that we got. At least now we are building our website to have a specific page that is speaking to women entrepreneurs, that is seeing how we can improve the women-led businesses in terms of providing them with technical assistance and also teaching them how to go about doing businesses for the betterment of the economy. Basically, that is what we really had with the Value for Women team. Thank you so much, Anne. In brief.
That's great. Thanks so much, Joylene. So I just want to note that there will be plenty of time to ask questions from both of our presenters. So please keep those questions in mind. You can also share them over the chat as well as they come up, and then we'll make sure to get to them. But first, we're going to hear from Grace. Over to you, Grace, from Family Bank in Kenya.
Thank you, Anne. Family Bank, just to introduce, is a commercial bank registered in Kenya, a local bank. It's locally owned and it's regulated by the Central Bank of Kenya. So we're in the business of banks, of lending money and holding deposits and investments. and we have 93 branches spread all over the country. So currently, according to the Kenyan landscape, we are in 37 counties with the objective of making sure that we have a branch in every county by the year 2024. So this bank was started in 1984 as a family finance building with the objective of financing unbanked population, which was largely smallholder farmers in coffee and tea in central Kenya. There was also government employees such as teachers and other lower government employees who are largely not banked then. They were not being served by the banks that were in the country then. So today, the business still serves the mass market, that's being farmers in tea, coffee, grain, MSMEs, government employees, parastatals, corporates, and others. But and we are currently implementing a strategy that will see the by 2020 classification. So part of this strategy is financial inclusion of women and youth. So we are actually focusing on getting more women-owned businesses and women-led businesses, which who actually constitute about 48% of all the MSMEs, contributing to 20% of Kenya's GDP. So largely, we have a lot of micro-based, micro and small client-based, and we feel that the higher percentage of this base is actually women. So what we are looking forward is to scale them from micro, from small to MSMEs. So what was our motivation? Our motivation for this engagement is because, one, what we are focusing on is to reduce the barriers that lead to the exclusion of women in accessing financial products. In Kenya, there is an upsurge of mobile money, which is actually, we would say it drives consumerism more than business growth, because the amounts that are being lent on mobile platforms are actually more focused on the consumer side than on the business growth side. So largely, we wouldn't say the highest percentage in Kenya is unbanked totally, because most of them are banking on mobile, which is not fully serving business needs. And you cannot grow a business from small to micro to medium only with mobile money. So our focus is largely to reduce the barriers, to prepare a product bundle for women uptake in the bank, carry out financial literacy and upskilling, and also to measure the progress of the product on a continuous basis, just to enable us to improve. So just to give an overview of the value for women engagement, Value for Women carried out a wholesome gender diagnostic analysis by assessing the organization strategy. They carried out key informants interviews. They reviewed documentation to identify the bank's gender assessment strength and performance vis-a-vis what the peers are doing in the market in Kenya and in Africa, and actions where the bank needed to work on in order to achieve our objectives of reducing barriers in financing, making a product for women, giving financial literacy and upskilling of business skills to women, and being able to review what we are offering to women for continuous improvement. So what the two actions, there are quite a number of strengths which we are still scaling up to be able to achieve our objective. But largely, we are looking at the number of actions which were incorporating gender metrics across the lending process to support gender lens portfolio. So basically, this was meant to enable the bank collect gender disaggregated data so that we're able to analyze, we are able to include this in our MIS reports and identify opportunities that can advise decision making. So we did this through a series of workshops to identify key KPIs that are to be included in customer data collection points, as well as staff KPIs that are to be met. So that was one of the ways. And we also had all staff, which was the second action point, understand gender concepts, differences between men and women, financial behaviors and product usage, and applying of concepts in the day-to-day work. So this was done through a series of 3 trainings that was again formulated by by Value for Women and Family Bank. So we did a training for all staff in the bank, which is about 2,000 plus staff. This was basically to help everyone appreciate the gender concepts, understand the barriers, and appreciate why we are actually focusing on women. And the other one was also to help customer-facing staff apply gender concepts in acquisition of their customers. That training was done with the credit management, the evaluation, analysis, and approvals team, which was basically to help them understand the key differences and biases that they may have and they do not know, which is probably the cause of why we have a very low number of women in the loan portfolio that the bank holds. So these were the main things. We're done also with case studies of how the competitors are faring, just to help us understand what others have done, how they have implemented, and the results that they have gotten, which was basically a good thing because it was able to help the staff apply what we learned to the local context. So what were the results? What we've seen happen, because before this engagement, we were already working on our women value proposition, which was largely an improvement on the technical side more than on the financial side. But with this engagement, we were able to understand the importance of collecting gender disaggregated data in our system and processes as a means of identifying key opportunities for the bank and also applying what we've learned in decision making. And I'll give a few examples of how this has actually worked for the bank. So we did include, one of the actions that we've done and completed is inclusion of key metrics of sex, age, and loan amount being included in MIS report, which was not happening. Of the little data that we had in women, we were not including gender as a metrics for MIS reports. We're not including age. And most of the time, we didn't give a higher thought of the loan amount obtained because the bank mostly will look at either the loan amount obtained on a monthly basis or the current the running balances of loans at a given time. So right now, we do a monthly report of the loan amount that a customer has gotten. And what we've obtained out of this data is insights on loan performance of women-owned businesses and women individual business owners through different classifications of loan performance. Here in Kenya, we classify loan performance as a normal loan is one that is being paid within 30 days from when the installment falls due. A substandard, it's 31 to 60 days. Watch loans are the ones that have not been paid between 61 and 90 days from when the loan installment fell due. And we count a loan as a loss if they are over 90 days without being paid from the date of the installment, from the date when the installment fell due. So what happened after analyzing this data for months of July and August, we've noted key insights, which has also assisted in product formulation. So despite having women with having existing products that we think were actually focusing on women, we only have 25% of total borrowers as women, with men constituting 75% of the reports that we analyzed in July. So women paid their loans better, with only 2% of the loan portfolio in loss category, compared to 4% of men's portfolio in loss category for the July 2022 data. So what we've noticed is this has helped us in a way in pushing for a new unsecured loan product, which initially without this engagement, we were not focusing on. We thought the products we have can serve women better. But now, you know, with this data and the widely acceptance of that we need to move past the biases, we've been able to develop a loan product, which is unsecured for women. Although the start amount is about 50,000 USD, we will keep monitoring. So based on the understanding of what we learned is that we have a separate product code for this loan so that we can continuously monitor and be able to see when we need to improve or what we need to tweak here and there to be able to serve the women MSMEs in the way that we want to serve them. So the other action, which I can say is on the staff training. This had an impact in balancing the focus of customer facing and credit staff and all staff in general in the bank. So the first implementation of the sex disaggregated data has been through pipeline management, and largely because the bank is in the process of changing our core banking system. So some of these changes that we wanted to do were going to be extensive, which, you know, the bank will consider and say, we can implement this in the new system, which we expect to have by mid next year. So what we did with the pipeline management, which is a key sales process, is inclusion of gender on the pipeline that every salesperson in the bank generates, and comparing this pipeline from the first quarter of the year to the second quarter of the year, we've seen a 9.5% increase in women-led businesses at prospecting and production stages. This means that our sales staff at branches are able to talk to women customers more, and I believe it's because of the understanding of the different behaviors of women and men towards product usage, towards financial behavior. I think one of the key things is that we learned the woman always will put the household first. So if you are just talking to the woman about business solutions without considering what could be the situation of the household, then you're likely not to close the sale. So this increase, we believe, especially with the introduction of an account bundle for women, which is actually the measure that we're using to collect gender disaggregated data in the meantime, and also with the introduction of an unsecured loan for women, then we'll be able to see the increase in this forecast, and also with the approval rate that we get of the loans that women apply. So I think the large takeaway is understanding what we need to do with data, how we need to collect it. I don't think this was anyone's focus when we started off, because we thought maybe we can just track an existing account and sell the existing products. But I think with the understanding of what it is that women actually are looking for and how their behaviors are, then we are actually able to identify the opportunities and create products that will match their needs. So that's what we have for Family Bank, and we thank Aceli Africa and Value for Women for this engagement that has been of great benefit to us. Thank you so much.
Thank you so much, Grace, for sharing so completely and comprehensively, and also sharing some of these emerging results that I think are just sort of starting to bubble up, which are really, really interesting to hear and to share. I'm sure very exciting for the audience to hear about already some of the results that you're seeing from a very brief engagement that we actually had with you. We'll get to Q&As in a second. I just do want to go back to Mango Fund, and just Mango Fund wanted to, Joylene, give you an opportunity to expand a little bit more. I know you very briefly, I'm probably conscious of not taking up too much time, very briefly spoke about one of the actions that we implemented together, but yeah, wanted to also give you an opportunity to talk a little bit more about the other two actions that we worked on together, and also some of the emerging results that you're already seeing.
Thank you, Anne. Sorry, I was trying to be mindful of time and I had to be as brief as I possibly could have been. The journey started and we had objectives and there were expected outcomes out of the objectives that with which we undertook the technical assistance with the Value for Women team. And one of the objectives was really to develop an organizational gender strategy, and that was involving basically facing with a gender commitment statement, which we did. And then there was we also had to conduct key informant interviews with our women-led businesses to sort of get feedback on how they feel Mango Fund is really reaching out to them to include them in our goals of ensuring that we businesses when they are doing businesses and the communities within which they are doing businesses. And then we also had to design a qualitative survey to understand client satisfaction with the current financial and technical assistance that we are already offering to our clients. Those were the main objectives. And I should say we were able to come up with the gender commitment strategy with the help of the Value for Women team and Aceli as well. That strategy, that commitment strategy and that strategy overall was to help us sort of move the women-led businesses away from the overall strategy to ensure that we improve or help the women-led businesses do their business, become involved in our commitment to improve the businesses and the environment within which we are doing business. So that strategy is what we are still working with to make sure that we do our businesses better. And the interviews were also conducted. We got the feedback, and which feedback we shared with our board of directors, and some of the issues are already worked on and some are already work in progress. Just like my former presenter has said, some were interest rate sensitive and others, it was a whole kind of information that came through that we are still looking at one by one, and with the help of the board, we are ensuring that we get possible solutions to make sure that women are not left behind in terms of addressing their needs and helping us to deliver business better to them. And the lessons that we learned really from that was women need to not be left out. Women need to be involved. Women need to be taken. We need to pay more attention to the women-led businesses. They are quite risk averse in terms of approaching financial institutions to get credit. They rather would keep it small and not aggressively grow their businesses. But as and when we continue to give them technical assistance in terms of training them, in terms of helping them to improve their record keeping system, to connect them to other clients that we have with whom they can do business, they are opening their arms wide to make sure that they do businesses better and at a larger scale than we found them. So we really have seen a positive impact, and we have really walked a good journey with the women-led businesses. And the entire team is now fully embraced with ensuring that they onboard as many women-led businesses as they possibly can. Like I mentioned in my presentation earlier, we were moving away from just a portion of less than 15% of the women-led businesses in our entire portfolio, and now we are at about 25%, or it's slightly above 25%. So it's a journey that we are happy to see improving, and we can only say we are seeing it better than it was before. So it has really been all the credit to the Value for Women team and the efforts they put in to make sure that we do better for women-led businesses than we were doing before. Thank you.
Thank you so much, Joylene, for sharing additional insights. And I think something that struck us when we started our engagement with Mango Fund is the fact that you were already making use of a very diversified origination strategy. So oftentimes when we work with investors or lenders, one of the first sort of actions that we recommend they take in order to increase their pipeline of women entrepreneurs is to diversify their networks, seek networks where women are. And this is sort of a pretty simple, low-hanging fruit that investors can take. And I would love it if you could share with the rest of the group specifically how Mango Fund investment officers go about finding women business owners in your market, because we were really struck with how diversified your approach was, and I think everyone would benefit from learning more about it.
Thank you, Anne. In terms of acquiring more women-led businesses, one, we explore on the already existing portfolio of women-led businesses to sort of refer their other friends who are women and are doing businesses. So that is one of the quickest wins for us to do, to exploit on the already existing portfolio of women-led businesses to sort of refer their other friends. And then we also have specifically a desk that is assigned to the women-led businesses. We have a women-led Women Enterprise Initiative desk, our investment officer, and her role is really to make sure that she moves out and she looks for women-led businesses through their different networking and social events, and as and when she moves out to those different events, then she's able to get as many women as she possibly can do. It's been aggressive over the last couple of months from the time we engaged with you people. And that has really helped us to grow the numbers. That's why we see a small jump. It may look small, but it's a huge jump, because now at least we've moved away from about a portfolio of about 700 million Uganda shillings, and equivalent to USD, you can do the conversion, to about 1.2 billion. That's a 500 million jump over the last 5 months from the time we started engaging with the Value for Women team. So we exploit the existing network of women-led businesses in our portfolio. And then also we take advantage of the different networks and social events that they usually have as women. And then we are able to get as much business as we can. Our ears are always on ground to hear about a women networking event of sorts around Kampala or across the region, and we run to it to see how we can exploit opportunities that exist therein. Thank you.
That's great. Thank you so much, Dorleen, for sharing. So we have a couple of questions that are coming through in the chat, and we've got about 15 minutes, which is great. So we have a question from Joseph, who wanted to understand a little bit more what you mean. I think, Grace, this is directed to you, what you mean by unsecured credit. How different is it from secured credit? If it doesn't include a collateral requirement, how are you dealing or managing with the risk of default?
Okay, thank you for that question. Just to explain, unsecured credit means that the client has met all the other criteria of lending. And what we've done is we've developed a risk acceptance criteria, because what we were seeing in the past is a woman, mostly because of social cultural issues, women do not own land, which is largely what Kenyan banks use as security. We ask for title deeds, we ask for cash covers, and most women, because of the socio-economic standings, they do not own land because land is largely inherited. And when you buy, you're just probably buying in small pieces, especially if you're a small business owner. So what happens, the woman will probably come with a title deed, which is not enough. She wants to borrow $50,000, but the land is only valued at $5,000. So we are not able to lend to her, despite the fact that she qualifies for that credit, except for the fact that she doesn't have collateral. So what we did in conjunction with the credit team, which does the screening and the approvals of the loans, we developed a risk acceptance criteria, basically measuring what a business must fulfill to be able to borrow this amount of money. So we want to see the years of ownership, which should have been at least 2 years. We want to see the ownership structure, in which there should be no ambiguity. We want to see whether they actually have a physical structure, which is actually important in case of follow-up that needs to be done. We also, if they are in trade, which is largely where our borrowing customers are, we are doing a stock hypothecation just to help them know that they cannot go to another bank again and commit the stock that they have. So again, we look at the industries. We are much focused on agriculture, on trade, and agriculture because we are actually able to reinforce the incomes that the people get, mostly because they are selling to cooperatives or they are selling to organized companies. And then we also look at personal guarantees, which is a must for them to provide. We look at the corporate governance, where the company has a board, they have a better chance, but most of them do not have, so that can be allowed as an exemption. And the other thing we look at is the ratios, where most of these people do not keep accounts, then we actually develop our own accounts, our own simple bookkeeping, and create ratios out of it. We look at gearing, we look at leverage, we look at whether they're making profits or losses. So the basic thing is that these businesses must be maintaining records, because if they don't have financial statements, audited financial statements, then it's from this record they are actually able to get, it's from these records that we are actually able to do our own financial balance sheet. I hope that has answered your question.
That's great. Thank you so much, Grace. There's actually a follow-up about the uptake of this loan product, but correct me if I'm wrong. Have you launched it yet, or are you still designing it?
Yes, for the product, we launched it this month. And actually, even before we had finished the training, we had staff calling us on certain cases that they needed to input. So yes, we have a few approvals on it. But remember, it's a very controlled loan facility to make sure that it's just the deserving, so that it's not misused. I think the other metric that I forgot to mention is we also look at the CRB. Kenya is very good at the credit listing. So as long as you have a clean with no days of arrears, then you qualify for the product.
Got it. That's great. Thank you so much. And actually, I wanted to also just hear from Mango Fund, because Mango Fund, this issue of collateral security, putting up security against a loan application also comes up for you. And I would love if you could share with the rest of the participants what approaches you're kind of taking to address this particular challenge.
Thanks, Anne. Collateral really remains some bit of a challenge, especially for women-led businesses, because they don't have, mostly the most reliable form of collateral has been a certificate of land title. But to sort of overcome that risk, like Grace has mentioned, once you're okay with the Credit Reference Bureau rating, then we have now moved towards considering asset-based lending, or what we call lease to own security, especially for businesses that are borrowing and acquiring assets. So we use the asset itself as the form of collateral to secure the credit, to secure the line of credit. And to sort of reduce the risk further, we sort of intensified our monitoring to make sure that, one, we monitor that the asset has actually been bought. Two, the asset is actually being put to good use. And three, the business is really running as per forecasted numbers to sort of mitigate the risk of diversion of funds and also reduce turnovers. And if the turnovers are reduced, then we provide technical assistance to sort of help these women to look for marketing opportunities, either within the network of clients that we have or anywhere else that we know. That is what we do, and we ensure that those assets are comprehensively insured against anything, fire, theft, or anything, and that reduces the risk.
That's great. Thank you so much, Darlene. So another question we have from Walu. to both of you, Grace and Joylene, what have been maybe a key challenge or a key lesson learned in this initiative? So maybe I'll start with you, Grace. What's been sort of a key challenge that you faced internally, perhaps, or a key lesson learned from interacting or engaging with Value for Women and Aceli on this project?
I would say the key challenge at implementation was largely the buy-in, especially before the trainings. Because I remember even setting up the first training, you need to explain to people and they can't understand, but you need to teach them about women. But I think after the first training, people actually learned there is a lot that we do not know. I remember also with our last training with credit, they were a bit skeptical, given the IFRS 9, where they have to provide for loans that are actually not secured. Then it became a big issue on how we are going to go about it. But actually, when we were the one who initiated, I think what I learned is initiate what you want, because like this risk acceptance criteria, we sat down with our SME manager, with our microbanking manager, and developed it. And then when we took it to our credit team, it was quite a surprise to them that we had actually thought of what they would probably ask beforehand. So what I have learned is on that initiative, because basically probably when you're fighting to get a product for women, you'll probably be alone. But in this case, I was not largely alone because the bank strategy is aligned, but just getting people to buy in was an issue.
That's great. Thank you so much, Grace, for sharing that. I think, yeah, getting that leadership buy-in is so, so important to unlocking the resources also and the time that you need in order to sort of get this product designed and launched. Joylene, same question for you. Any kind of key challenge that you faced or any key lessons learned that came out of this engagement with Value for Women?
Thanks, Anne. There wasn't really much challenge. One, because as Mango Fund, we were already on the journey of really embracing the women-led businesses in our portfolio, though it was still on a small scale. So I should say the Value for Women TA came in at the right time to sort of help us, upskill us in terms of how better we can do it to sort of take care of the women-led businesses. And what we learned from the Value for Women team was really to make sure that we have a particular strategy that is helping us to really focus and execute the women-led business in our portfolio and consider women as really important in terms of growing our portfolio, because they have better attributes when it comes to running and moving with credit facilities, because research has showed and numbers are proving to us. So it was really about helping us to how we can do it better. And that has really been helpful to us. We didn't have challenges, but we had a lot to learn, and we appreciated the effort that came through from the Value of Women team, technical assistance.
Thanks so much, Joylene. I think one last question that we can get to before we start wrapping up here. This question is for you, Grace, from Sally. She wanted to know a little bit more about the gender metrics, sort of the indicators that you're using or planning to use. Would you be able to give sort of a quick summary of the metrics that you've already implemented and maybe the ones that you're planning on in the next phase?
Yes, I can do that. And I think the first thing is knowing whether the company is women-owned or the business is women-owned or not. Because for individuals, basically the core banking system will have to capture whether it's male or female. So the challenge comes in where the companies cannot be, we've not been capturing that data, which is one of the things that I said, because of the system change, then we intend to implement it in the new system. But currently what we've done is develop a product, an account product for women in business, a current account product and a savings account, so that now we can be able to just pull out of the system this particular account and get the data of how women are doing. So once now this is done, what we also do is is data cleanup of the accounts that we're already holding and move them to the new. Of course, now that takes time. So that's not something we can just close in months, because we are looking at data from when the bank started. But I believe in starting. So once that is started and continuously as accounts are being opened, we put them in Discord, we're able to get the businesses that are owned by women. And women ownership, we look at 51% or more of shareholding in the company. So the other gender metrics, which we are implementing in the loan system, we have a core banking system and another system where we process the loans, is because on the loan system, you can get more data. You can, it's a loan officer asking the customer, reviewing, appraising the company, reviewing the documentation, so they can be able to make this judgment on this particular item. So there is whether the company is women-led, because like our bank is not women-owned, but it is women-led. Our CEO and 25% of the executive team is made up of women. So we also look at whether it's women-led. We look at the workforce composition. We also want to look at the age, ideally, because besides women banking, we're also focusing a lot on youth banking. And this is just to help us to appreciate what kind of metrics that the youth are actually involved in. So the other one that we are looking at is the loan amount that the customer has applied and the loan amount that has been approved and the applications that have been rejected. So this particular ones is something for implementation, slated for implementation in the new system. And for sole proprietors, that is fully implemented. We can get the gender, we can get the amount that is disbursed, we can get the business size. So for companies, that is what is going to be implemented on the account via the ownership. The other thing that we are looking at is having now these same metrics on cooperatives, understanding the ownership, especially for the agriculture-related cooperatives, understanding the ownership, the leadership, the workforce composition again, and the business turnover size. So we also have identified a number of staff where we are going to add these metrics in their KPIs. And those are people we are calling the branch champions. So they're going to hold metrics of women banking in their KPIs generally, just to show how many accounts have they brought that are women-owned, women-led, or the workforce is actually composed of women. How many loans have they disbursed to women-owned companies? So basically, that's what we are doing. Thank you. I hope I've answered your question. Thank you.
Yes, that's great. Thanks so much, Grace. So we've run out of time, unfortunately, but I do want to just sort of wrap it up with a couple of key takeaways, just reflecting on Value for Women's experience working with both of these organizations. I think something that Grace mentioned, which is worth mentioning, again, is sort of leadership buy-in and leadership engagement is really, really important. And we saw that in both the organizations that we worked with. And actually, incidentally, both Family Bank and Mango Fund are women-led organizations and had sort of a strong understanding of the importance of having a women's strategy, a gender strategy. And so to a certain extent, kind of getting that buy-in was not actually as much of a challenge, partly because, both of these organizations are led by women. The other, I think, big reflection that we have is, again, on the importance of sex disaggregated data. Mango Fund already sort of is able to sex disaggregate their their business data. Really important to already get a sense for performance. And both Mango Fund and Family Bank, as you heard today, have seen that their women business owners and their women customers are actually often better performers than the average in the portfolio. The last kind of thing that I wanted to mention is that you've only heard sort of a brief snapshot of the work that we did and some of these emerging results, but we will be publishing some case studies forthcoming in the next couple of weeks. So please do look out for that. And just before I hand it back to Aceli, wanted to thank all of you again for attending. And thank you so much, Mango Fund, Joylene, and Grace from Family Bank for sharing your experiences. So over to you, Edda.
Thank you, Family Bank and Mango Fund for sharing your cases. And we would like to receive your feedback. We'll appreciate your feedback. There's a link that has been shared by Otala in the chat. Kindly complete and give us feedback about how this event went. And as Anne said, we will be publishing the case studies soon. So we will keep you, we'll share with you once the case studies have been published. Thank you very much, and we wish you a good day and a good evening for those of us in East Africa. Thank you.